Well, so many business owners are struggling in this pandemic, right? Especially restaurants. And many thought they had insurance safeguards in place. Now, hundreds of them are taking legal action after finding out their business interruption policies are essentially worthless.
Yeah, I mean, imagine your frustration. CNN business and politics correspondent Christina Alessi joins us now. Christina, so, I mean, they had this insurance, thought it covered it. What's that dispute then here?
Well, the insurance companies are denying these claims, essentially arguing that the coronavirus does not cause physical damage. This is a technicality, some business owners are arguing, and now they're taking that argument to court. Business owners have filed about 1,000 lawsuits. In reporting this story, I'm hearing there are thousands others that are scheduled to come online. But unfortunately, this is going to take quite some time to play out in the court system, and those decisions will not come fast enough for some business owners. Dolores Tronco DiPiero was living her dream, running a successful restaurant in New York City's famed West Village. Drawing from life savings, investors, and a small business loan, Tronco DiPiero poured nearly $1 million into the space. Business was booming when she opened in December 2019. Then COVID-19 hit New York City.
Coronavirus would hit 96 days later, and it would be the beginning of the end of what was that lifelong dream.
The first place she turned to for help was her insurance company. She had hoped for a payout from what's called a business interruption policy.
I filed the claim March 17th. I got a phone call on the 20th letting me know that our claim had been denied.
That fast?
Yes. None of us hoped to get rich or have an insurance windfall. I think we just hoped that maybe our insurance companies would at the very least credit us back our premiums for the year.
The parent company for Tronco DiPiero's insurer, AXA, told CNN it doesn't comment on specific client claims. Tronco DiPiero received funding from the Payroll Protection Program, but it's not enough. She can only seat a fraction of the guests at outdoor tables, while her monthly rent of $23,000 remains.
So when you finally leave and you turn off the lights and you shut the door, how are you preparing yourself for that?
I don't think I can prepare myself for it.
After the 2003 SARS outbreak, the insurance industry changed most policies, excluding losses tied to viruses. In many cases, a policyholder must stipulate physical damage, like fire or flood, to collect.
A virus does not trigger the direct physical damage that's necessary to enact a business insurance or business interruption policy. And we've actually seen that play out already in court.
About 1,000 lawsuits have been filed in more than 40 states, according to the University of Pennsylvania. Attorney John Hoteling represents restaurant owners suing insurance companies to force payouts. Many of his clients do not have virus exclusions in their policies, but he argues the virus itself constitutes physical damage.
Who believes that COVID-19 is not dangerous physically? They're ignoring the words of their policies, and a lot of businesses are suffering as a result of this.
The scale of the problem is massive. One insurance trade group estimates the nation's business losses related to COVID at its height could total nearly $1 trillion a month. The insurance industry stance: businesses need help, but only the government can afford these astronomical sums, and payouts could cripple the industry.
We would see systemic strain on the industry within a matter of months. It could cost anywhere from $150 to $400 billion a month.
Congress could create a government backstop to help, but any future legislation is unlikely to help Dolores Tronco DiPiero, who's permanently shuttering her New York City restaurant.
I take it as it comes, one day at a time. And the only way is to look to the future and to find the things I can be thankful for, and to remember that if only for 96 days, I did it.
So a heartbreaking outcome for Tronco Di Piero for sure, but a small glimmer of hope for others who are fighting insurance companies. Although there have been only a handful of cases and 2 or 3 of them have already been decided in favor of the insurers, one judge in Missouri has allowed a group of hair salons and restaurant owners to go ahead and sue their insurance companies for direct physical loss. Poppy, Jim?
We'll see how the rest of those cases go. I mean, certainly a lot of money and businesses at stake. Christina Leschi, thanks very much. Well, 1/3 of the businesses in the New York area could shutter, close down in just months. That if lawmakers don't act fast with new aid. A new survey shows that businesses will go broke without government support if the current revenue levels remain flat.
CNN Business lead writer Matt Egan joins us now. I mean, Matt, you're reporting on this, that the New York Fed is the one that issued this warning, and we're talking about a matter of months here.
That's right. It wouldn't take long at all for this to happen. This really alarming Fed survey found that New York area manufacturers would go bust in just 6 months. Service sector companies, which include everything from law firms to entertainment to finance, they would go under in just 8 months. Now, this survey really focused on New York State, northern New Jersey, and southwestern Connecticut, a key part of the U.S. economy and one that was hit very, very hard by the pandemic. And it suggests that there is real risk of lasting economic damage here. I mean, I'm coming from northern New Jersey right now, and I can tell you things are definitely not back to normal. Restaurants are open, but it's just for outdoor seating. Stores, they're not really very crowded. Offices, especially in Manhattan, are largely empty. And so the real risk here is that Congress doesn't do enough to provide the real help that companies really need right now.
Well, we know about that. I mean, Ben Bernanke, a Republican, has been warning about this, saying don't make the mistake we made in the Great Recession, do more rather than less. And the White House keeps promising, really, a V-shaped recovery. But your new reporting is that Wall Street investors, most of them don't think that's going to happen.
That's right. If you look at what's happened on Wall Street, the S&P 500 hit its first record high just yesterday since February. And yet, some of the real sophisticated investors are concerned right now. Just 17% of fund managers who were surveyed by Bank of America expect that rapid V-shaped recovery. 31% see a more gradual U-shaped recovery. And this is really what is alarming, is that 37% think that there is a risk of a double-dip recession, Poppy.
Scary. Matt, thank you so much. And thanks to all of you for joining us. I'm Poppy Harlow.
I'm Jim Sciutto. We'll be back after a short break.